You want to know why you're still not consistently profitable? It's because you care more about being right than you do about making money. And in exactly 4 minutes, I'm going to show you the exact psychological trap that is draining your account right now, but worse. I'm going to tell you about the specific trade where my ego cost me $54,000 in a single afternoon. Not because my analysis was wrong, but because my analysis was perfect. Look, I've been in these markets for a long time. I've seen bull runs that made idiots look like geniuses, and bear markets that made geniuses jump out of windows. I've traded through it all. And the number one killer of accounts isn't bad risk management. It's not poor strategy. It's the human ego. It's the desperate, clawing need to look at a chart and say, I called it. Listen to me. Stop checking another tab right now. Put your phone face down. Because if you're currently in a drawdown, or if you keep taking 1 step forward and 2 steps back, what I'm about to break down right now is going to save your trading career. Let me take you back to a Tuesday in November. I'd been on a hot streak, 3 weeks of green. I was feeling untouchable. I pulled up the chart on an asset I'd been stalking for a month. Head and shoulders pattern, flawless. Volume profile, screaming distribution, macro data, pointing to an absolute bloodbath. I didn't just think the market was going to drop, I knew it. So, I took my position, heavy. I put my stop loss where the technicals told me to, and then the market did what the market does. It went up. Now, a professional trader cuts the loss. But me? I was the smartest guy in the room, remember? I moved my stop. I said, the market is wrong. It's a fake out, a liquidity grab. It kept going up. I averaged down. They're hunting stops, I told myself. I was literally arguing with the screen. I was screaming at a piece of glass, demanding it respect my trend lines. By 3 p.m., my account was essentially vaporized. I sat in the dark for 3 hours. I didn't eat. I didn't sleep. And the sickest part? The absolutely most twisted part of this whole story, the next morning, the market crashed. Exactly like I predicted. I was right, and I had zero capital left to trade it. Being right cost me my livelihood. If you've ever moved a stop loss because you knew the market was about to turn, type, I'm guilty, in the comments right now. Go on, do it, admit it. Because until you accept this, you are market liquidity for guys who have mastered their ego. So, how do we fix it? Over the next couple of minutes, we are going deep. Grab a notebook. I'm going to give you the 3-step execution protocol I use to completely separate my ego from my entries. We're going to cover why your win rate literally doesn't matter. Yes, you heard me. And toward the end of this session, I'm going to reveal the Amnesia Technique, a mental reset trick I use immediately after taking a loss that completely prevents revenge trading. But first, we need to understand the biology of why you are programmed to fail at trading. Chapter 1. The biology of being right. To understand why you're losing, we have to look under the hood. We need to look at your brain. Most of you think trading is about math. It's not. It's about biology. When you mark up a chart on a Sunday night, preparing for the New York Open, you are forming a hypothesis. You see a liquidity sweep. You spot a pristine order block. You say, the market is going to drop here. What you don't realize is that the second you make that prediction, your brain attaches your self-worth to the outcome. The human brain releases a massive wave of dopamine when we correctly predict an outcome. It's the exact same chemical response a gambler gets when the roulette ball lands on black. Your brain literally cannot tell the difference between successfully predicting a crypto breakout and pulling a slot machine lever. And this is where the poison seeps in. In your everyday life, being right is rewarded. In school, you got an A. In arguments, well, let's be honest. Think about the last time you argued with your spouse or your partner. Halfway through the argument, you probably realized you were actually wrong. But did you apologize? Did you pivot? No, you dug your heels in. You brought up something from 3 years ago just to win the battle. You would rather win the argument than have peace in your house. In trading, you do the exact same thing. You would rather prove the chart right than have profit in your account. When the market invalidates your setup, your ego perceives it as a personal attack. It says, "I am not stupid. I know what I saw." So you widen your stop loss. You hold the bag. Because taking the loss means admitting you were wrong, and your biology will fight to the death to prevent that dopamine crash. If your eyes are glazing over right now because this isn't a 5-minute scalp strategy or a chart setup, wake up, wake up. This is the exact stuff that actually makes you profitable. Anyone can draw a triangle on a chart. Literally, an 8-year-old can identify a trend line. But managing the chemical cocktail in your brain when that trend line breaks, that's what separates the top 1% from the liquidity providers. You have to rewire your brain to get dopamine from times executing your plan, not from predicting the future. Which brings us to the biggest lie you've been sold in this industry. Chapter 2. The Illusion of Control. Let me ask you a question. When you enter a trade on the S&P 500 or a major synthetic index, how much control do you have over whether that candle closes green or red? Zero. Absolutely none. Unless you are an institutional market maker moving billions of dollars out of Manhattan or London, you are a passenger. Yet, we trade like we're driving the car. This is the difference between predictive analysis and reactive execution. Amateurs predict, professionals react. Let me tell you a story. A while back, I was testing a new automated trading system, a custom bot I engineered. I handed this exact same algorithm over to 2 different people to forward test. Trader A was a complete beginner, barely understood what a pip was. Trader B was a 7-year veteran who had traded through the 2020 crash. I gave them both the exact same parameters. When the bot signals a long, you take it. When it hits the invalidation level, you kill it. Period. At the end of the month, Trader A, the beginner, was up 14%. Trader B, the veteran, was down 6%. How is that mathematically possible with the exact same system? Because Trader B had an ego. When the bot signaled a buy, Trader B looked at the macro data. He read a news headline out of Canada. He looked at a higher time frame and decided the bot was probably wrong, so he skipped the winning trades. And when the bot hit a stop loss, Trader B decided it was just a liquidity grab, turned the bot off, and manually held the losing trade all the way to margin call. The beginner won because he had zero ego. He treated the market like an if-then statement. If price reaches X, then I execute Y. He wasn't trying to guess the future. He was blindly reacting to the present. He was executing. You see, the market is completely chaotic. You cannot control the outcome of the trade. The only thing, and I mean the only thing you can control, is your risk and your reaction. In Chapter 4, I'm going to show you the exact spreadsheet I use to track my ego mistakes, a system that forces me to treat my manual trades with the cold, dead execution of an algorithm. It will completely change how you log your trades. But right now, I need you to look at this chart. Chapter 3, the Amnesia Technique. That blank chart you just saw, that is what the market actually is, a cold, calculating delivery of data. But the second you take a loss, your brain turns that data into a battlefield. You want revenge. You want your money back from the New York session, or you want to punish the London Open for stopping you out. The defining trait of a consistently profitable trader isn't their win rate, it's their recovery time. How fast can you go from a devastating, ego-bruising loss back to a state of complete emotional neutrality? I call it the Amnesia Technique. It's a strict, non-negotiable protocol. I run the absolute second my stop loss is hit on a synthetic index or a crypto pair, and it has 3 steps. Step 1, you close the laptop. You step away from the monitors. For exactly 10 minutes, you are not allowed to look at a chart. Not on your phone, not on your tablet. When you take a loss, your amygdala, the fear and anger center of your brain, hijacks your prefrontal cortex. You are literally, biologically, functionally stupid for about 10 minutes after a loss. Do not touch a keyboard. Step 2. You say it out loud. I don't care if you feel crazy. Say it. The market owes me nothing. My analysis was a probability, not a guarantee. You have to vocalize it to break the internal loop of, I was right, the market is wrong. Step 3. When you sit back down, you don't just log the entry, the exit, and the P&L. You log your emotional state. Were you anxious? Did you force a setup because you missed a move on US 30 earlier in the day? Stop. Look at the timestamp on this video. Most people have already clicked off. They went to go watch funny cat videos, or they're scrolling TikTok, or they're back on Twitter looking for some guru's quick fix signal group. If you are still watching this, if you are still taking notes, you actually have what it takes to survive in this industry. Let's keep pushing. Chapter 4. Rethinking win rates and risk. Here is the biggest trap the retail industry sets for you. They sell you win rates. 90% win rate strategy. Never lose a trade. It is complete mathematical garbage. Let's talk raw statistics. Let's look at the actual math of profitability, because the numbers do not care about your feelings. You can have a 60% loss rate, meaning you are flat out times wrong times 6 times out of 10, and you can still pull a massive income out of the market. How? It's the only holy grail that actually exists in trading: asymmetry. If your risk to reward ratio is 1 to 3, meaning you risk $100 to make $300, let's look at a sample size of 10 trades. You lose 6 trades. Your ego is bruised. You feel like a failure. You're down $600, but you win 4 trades. 4 times $300 is $1,200. You were wrong more often than you were right, but your account is up $600. The law of large numbers dictates that if you have a statistical edge and you execute like a machine, variance will eventually iron itself out. But you don't let the math work, do you? Because when you're in a winning trade, that $100 profit looks so good, your ego says, take it now before the market takes it back. Prove you were right. So you cut your winners short. And when you're in a losing trade, you move your stop loss because you refuse to be wrong. You flip the math. You create a negative expected value. You have to stop trading to protect your ego and start trading to protect your capital. Chapter 5. The final shift. The market is not a casino, and it's not an ATM. The market is the most expensive mirror you will ever look into. It will reflect your impatience. It will reflect your lack of discipline. It will reflect your deep, desperate need to be right and to feel smart. Every unresolved psychological flaw you have will be exposed on a 5-minute chart, and you will pay for those flaws in US dollars or pounds. You've just spent some minutes with me. We've torn down the biology of your decisions, the illusion of control, and the mathematical reality of risk. You now know exactly why your need to be right is keeping you broke. But knowing the theory isn't the same as executing the plan. Tomorrow morning, when the bell rings, your biology is going to try to take over again. You are going to want to fight the trend. If you want to stop trading alone in a vacuum, if you want to be surrounded by a community of traders across North America and Europe who will call you out when your ego is taking the wheel, who trade the data and execute with zero emotion, click the first link in the description. It is not a signal group. I am not going to spoon feed you entries so you can remain dependent on me. It is an ecosystem built for execution. It's a place where we strip the ego, run the statistics, and actually keep the money we make. Subscribe to the channel if you haven't already. Stop trying to predict the future. Go execute your plan. I'll see you in the next one.